Hello and welcome to another video. This coming Wednesday is one of the most anticipated budget announcements in years. As we know, over the past year, the government has been spending lots of money as a result of the pandemic, and as a result has the biggest deficit since World War II. Now, the budget is an opportunity for the government to say how they're going to be spending our money and how they're going to bring money in through taxes. So the highly anticipated budget is on Wednesday, which will give us an opportunity to see how the government is going to do this over the next year. So this video is just a few highlights on what you should be looking out for in Wednesday's announcement. Later on in the week, I'll follow up to understand exactly what the Chancellor has said and what that means for your money. First is spending money. The government is most likely going to continue to extend its furlough scheme and support industries that have been heavily impacted by lockdowns. This will be the likes of non-essential retail and the food and beverage industry. As we know, the furlough scheme was meant to end at the end of April, however that looks unlikely. Instead, we're probably going to see an extension and maybe a tapering of the furlough scheme as the economy opens up and companies get back to normality. And also, we're likely to see an extension of the business rates relief as shops that have been closed during lockdown have been heavily affected. This will be welcome relief to non-essential retail and the food and beverage industry, as those were industries most heavily hit as a result of lockdown. And finally, it looks like the stamp duty is set to be extended. Now, I did a whole video talking about what will happen if the stamp duty holiday gets cut at the end of March. Now, rumours suggest that the stamp duty holiday is only going to be extended for 6 weeks to allow those people who haven't completed their sale to complete it in that time. I think it's highly unlikely that the government will extend the stamp duty holiday significantly, as the tax they get from stamp duty is a great money maker for them. Now, as the government has been spending an awful lot of money over the past year, it also needs to bring money in. And the way it brings money in, unfortunately, is through taxes. As I mentioned earlier, the stamp duty holiday is set to come to an end, which means that every house over the value of £125,000 will be charged stamp duty. But that won't be the only tax which is charged. It is also likely that corporation tax will see an increase. Now, the UK has one of the lowest corporation tax rates in the OECD countries, and at the moment it sits at 19%. But we're likely to see tax increases, particularly in the US, and it seems as if the UK is likely to follow suit as well. Some experts believe that we're likely to see an increase from 19% right the way up to 23%. And what this means is that companies that make a profit in the UK will be charged 23% tax rather than 19% tax. This could impact the companies that we work for, as these companies may not be able to reinvest those profits and grow and maybe hire some more people. So let's wait and see about that one. Now, there have been rumours that the government is going to raise the capital gains tax in line with income tax, which is pretty different from the way it works right now. At the moment, capital gains tax is charged on selling business assets, buying a second home, and non-ISA investments. And the current capital gains tax rate is between 10 and 20% for most assets and 18 and 28% on property, which means that could change to be in line with the income tax which someone's charged. And this is something definitely to look out for, because if you hold plenty of your investments outside of your ISA wrapper, because maybe you max it out or just don't use your ISA, then you will be charged a higher proportion of tax. This also goes for people who own buy-to-let properties, as you'll be charged tax at your income rate rather than the capital gains rate. And this could have big impacts on the buy-to-let industry, which may prompt landlords to sell. And let's just remember, there might also be a few surprises which the government slip in. One thing which might be good is that the government increases the contactless limit. They've already increased it from £30 to £45, but some rumours believe that they're going to increase it again from £45 to £100, which means that the vast majority of people will be able to put things on card, as 1 in 3 people have been refused payments in cash since the beginning of the pandemic. We might also see a second round of the Eat Out to Help Out. Whilst Eat Out to Help Out wasn't great for the spread of the pandemic, the hospitality industry is one industry that's been hit incredibly hard as a result of lockdown. And we might see the government help out again now that the vaccine is rolled out. And finally, we might see an increase in spending for the government to hit its net zero target by 2030. This could be more support for green energy or increasing the network of electric charging points. And with the 2021 United Nations Climate Change Conference, or COP26, in Glasgow in November, it will be a signal to the world that the UK government is ahead of its target. So let's watch out for that one. So those are a few things to look out for when the budget is announced on Wednesday. And make sure that you subscribe so you don't miss out on the video later on in the week when I talk through exactly what the Chancellor said and what that means for your money. And if you have enjoyed today's video, please hit that like button, and I'll see you next time.